disclosures at. Hey everyone, and thank you for watching today. My name is Josh Pagan, real estate consultant and agent. Today we'll be looking at a duplex that just recently sold in the heart of Mount Airy, Philadelphia. 100,000 people call this 5.5 square mile neighborhood Mount Airy home. Situated and naturally surrounded by the Kreshim Valley and Fairmont Park, this northwest Philly neighborhood hosts a part of the Germantown commercial corridor that connects Philadelphia Center City with northwest Philadelphia. 451 West Elliott Street in Philadelphia, PA 19119, situated in West Mount Airy, recently sold for $342,100. There's two bedroom units in this one building. The house itself is 2,050 square feet. This home sits right around this area that you can see on the map, in close proximity to two train stations, right here and right here. Germantown Avenue acts as a commercial corridor that connects northwest section of Philadelphia all the way down to Center City, Philadelphia. Something that is very important when buying a rental property is being in close proximity to transportation and things to do. If you give people an ability to have something to do and give them an ability to get to where they need to go for work or for pleasure, they're more inclined to rent there. Let's go ahead and take a look at the numbers that this property would take to purchase and rent out, see how the situation works from an investment standpoint of view. We know the purchase price was $342,100. The interest rate for an investment property is typically higher than if you're using it for a primary residence, so we'll go ahead and estimate about 4% for this. For an investment property, we need to go with at least 20 to 25% down to show the lender that you have enough skin in the game. So for this example, we'll go with 25% down because we like to be conservative. And a rental unit in this area is going for about $1,275 for a 2-bedroom. And because we have 2, we can plug the number in twice right here, giving us a monthly gross revenue of about $2,550. We know the taxes for this property based upon the recent sale data. Taxes are $2,954, and this is a yearly payment. Insurance we can't guarantee as realtors or real estate agent or real estate consultants, but we've been using about $70 to $100 for our estimate. So we're gonna go ahead and put $75 in here just to be conservative. That gives us a total fixed expense every month of about $1,546. What we like to do next is take our fixed expenses and we like to add on operating expenses. We always are gonna have to account for vacancy rates, so we like to put about 7 to 10% there. Reserves, just in case anything goes wrong, we'll put 7%. Repairs, 7%, and management fee. We're not going to manage this ourselves, so we'll put 10%, and we'll just leave utilities blank for this. So our total operating expense, which is our fixed expenses plus our variable expenses, is $2,025 per month. This leaves us with a net operating income or a positive cash flow of about $525 a month, which is pretty good. The important part though is that we make sure this aligns with our goal. Some people focus heavily on cash in their pocket every single month. Some people focus on how long it'll take to get your initial investment back. So if we have a purchase price of $342,000 and 25% down for that is $85,525. Transfer tax in Philadelphia and the Commonwealth of Pennsylvania is about 4.2%. So when we buy something, we split that between the buyer and seller, which gives us $7,184. And for title fees or recording fees, we've been using about 1.5%. So we're going to stick with that one for this example as well. Our total out of pocket to buy this property is $97,840. Now, if we take the amount of money that it took to purchase this property and we take the amount of money we're going to be getting every month and we calculate our cash flow, which we know is $524, we can see that to pay back our initial investment, it would take about 15 years. I personally recommend to my clients to get your investment back between 7 and 10 years. But again, every investor, every situation and deal is its own experience. Some people want cash flow of $500 a month. Some people focus on getting their initial investment back. It just depends on what you're looking for to see if this property makes sense. The other thing we need to look at is our cash on cash return, or the amount of money we'll be making back based upon how much we put in. To get your cash on cash return on investment, you take your yearly positive cash flow and you divide that by your total out of pocket costs. For this example, we're taking $6,295.39 and dividing that by $97,840.60. This gives us a cash-on-cash return of 6.43%, which is like saying 6% return on your investment, which is pretty good. And again, All of these situations depend on what you're looking for as an investor and how you want your portfolio to be built. There is no right or wrong answer on how you invest in real estate. It's just what you're most comfortable with. I want to thank you guys for taking the time to watch this video. If you like the video and you like the content that we're generating, please give this video a thumbs up. It just basically tells YouTube that we're doing a good job and lets us show our videos to more people. Also, if you want to stay up to date with the videos we do post, click the subscribe button, and to make sure you don't miss out on anything in the future, hit the notification bell. And thank you again for taking the time to watch this. Have a great day.